from the stock market to the fixed income market, still within Nigeria here, we have it that at the moment there's this the primary market auction where investors' sentiment is tilting towards that because there, the CBN will be offering about 162 billion worth of maturities that's across the counters there. And we see that the demands are hanging around the new OMO bill, which rallied about 23.50% on offer in the secondary market, and that's down from its 24.59 stop rate at the auction. So the bond market, it opened quietly, but the interest later picked up in the 231 and 2035 and 2034 for the papers there. But to give us more details about that and other instruments of the market, let's talk to Uzo Anekebe, fixed income dealer with Access Bank, for details of the intraday primary market auction, as well as the Q2 bonds issuance calendar. Thank you for joining us, Uzo.
Thank you for having me. Good afternoon.
Okay, so I'm sure I've done a bit of analysis, but I leave it to you right now. Can you tell us what investor sentiment is looking like at the fixed income market for the primary market auction currently going on?
Yes, so today the money market is very liquid with about 1.4 trillion in market liquidity owing to the OMO auction settlement that happened the previous day. So we see in this auction, the DMO is offering 162 billion naira. So compared from where the opening rate is, you will see that we have excess liquidity for this. So we expect that this auction will be largely oversubscribed, and as a result, we'll anticipate that the rate will likely come down in this primary market auction that is happening today. We have seen quite limited activity in the secondary market, as most market participants are on the sideline waiting for the result of this auction to determine movement. But like you rightly mentioned, we've continued to see activities in the 6th Jan OMO paper, which is trading at sub-24 levels, at 23 levels. And this paper was issued by the central bank on Monday at 24.5%. So for us, we anticipate that the demand in the papers will continue to be elevated as we continue to see significant liquidity in the market, and most market participants will want to utilize this liquidity to achieve much more yield in the market. On the fixed income space, on the bond space, we've continued to see activities in the bond paper, the mid tenor securities, where we've seen activities in the 2032s and 2033 papers, which is trading at 19% handle. And just like you rightly mentioned, we have the DMO release the calendar yesterday for the bond auction that is going to happen on Monday, with the settlement on the 25th of June. And this auction, though it came as a bit of a surprise to market participants, because we saw the DMO going to offer only 100 billion naira on both papers, 50 billion on the reopening of the 2029 paper, while they will be issuing a new 2032 paper, which they will also be offering 50 billion on this paper. Most market participants, we saw a rally when this thing we saw a rally because of this, and we've continued to see, we anticipate that this rally will continue for the remainder of the week, as most market participants will try to ramp up instruments, considering the fact that the size of the offer is way less than what was initially projected in the auction calendar, which projected that there should be around 150 to 200 billion on the offer. However, we've seen only just 50 billion on each security. So for us, we anticipate that this bond auction will be largely oversubscribed due to the persistent system liquidity that we've continued to see in recent times, and we anticipate that the stop rate should be sub 19% handles.
Okay, so I'm keen about that 100 billion naira target by the federal government in this for the month of June, which is just has about some 12 days less and 8 trading days left. But why do you think that? Why is the government reducing it? I know that the government, tries to use this debt instrument to partly fund the 2025 budget and manages public debt. So, but why is this reduction in the FGM bond auction?
Yeah, so we noted that DMO has based on what the trend from the beginning of the year, they have borrowed significantly in the market. So we've noted that they don't have so much appetite to borrow more, considering their cost and the volume that they have borrowed within the year. So this is largely the reason why DMO is not borrowing so much at this time. We expect that maybe towards and they also are trying to space out this borrowing so as to manage the volumes on this offer. Remember that the 2029 offer was also offered in April, and this was also offered in May. So you will look at all the volume that has been subscribed on that tenor, and they are trying to also manage their costs to ensure that they don't overload it in terms of when the settlement will happen in 2029. So partly because of looking at where the what has been subscribed on this, and also considering the fact that they have been quite active in borrowing, and most of their borrowing now is shifted towards the shorter term, which is the treasury bills, the Nigerian treasury bills, which they are more focusing on for more than the bond space. However, we'll continue to see. We anticipate that towards the Q3, Q4, we will see significant borrowings from the bonds to fund the remainder of the budget for the country.
Uzo, thank you so much for that analysis. And of course, we hope that investor sentiment will continue to be healthy towards the bonds as well as the treasury bills instruments. Thank you so much for your time on the show.
Thank you for having me.